Good morning. Welcome, everybody, to another market open. I hope everyone is having a great day. It is May 15th. We are 15 days into May, 9:21 a.m. Eastern Standard Time. And we've got some things to talk about because we've got a market that needs to be open. Hope everyone is having a great day. A lot of interesting things going on to start off the week. This is an interesting week because we just got done with CPI data. We just got done with relatively strong earnings across most tech companies. There's still some earnings this week between some of the blue chip names like Walmart, Target, etc. But most of the sort of bigger name earnings are done. Apple and Microsoft now compose about 14% of the S&P 500, which is just quite dandy and amazing to see. So we've got a lot still going on with the rest of the markets, but the big stuff is done. Vincent, what's up? Seth Roth, what's up? Roy, Dominic, Midwest, Dex, Ramon, Jess, love the t-shirt. I'm glad you noticed. Felicia, hello, good son. Hello, mom. Mr. Russo, Nicholas, Justin Bryant, Silas, Tessa, did you even sleep? I did sleep. I know I'm wearing the same outfit from last night on Finance Junkies, but I did sleep. Yo, it's good to be back in my morning routine, getting my old things market fix from Amit. TJ, I appreciate you. Why is SoFi down 7%? The reason for this is because Wedbush just came out. Let's pull up their Twitter. And they downgraded the stonk. Okay, they downgraded the stonk. And the reason they downgraded the stonk is because, well, you know, the the stonk is not exciting to them. They downgraded it to $2.50. Let's read why they downgraded it, and then we'll go from there and we'll see if there's any logic here. Okay. We're downgrading shares of SoFi to underperform from neutral as we believe, one, the company may be nearing a tipping point on the fee income it recognizes related to loan origination sales. Two, capital levels may be overstated using fair value accounting, and we believe the company may look to raise capital this year to support growth. Three, in a hypothetical analysis in which we applied the held for investment CECL accounting methodology used by Lending Club to SoFi's financials, would result in a SoFi tangible book value being reduced materially by nearly 60%. To be clear, we do not expect SoFi to change its accounting methodology, nor do we expect SoFi to reduce its fair value mark assumptions in the near term. That said, we believe regulators may look at SoFi's accounting and may suggest SoFi to operate under a more conservative capital requirement framework that contemplates a hypothetical switch. This is a very nuanced and specific reason to get the book value from 305 to 127, which would result in this 250 price target. They also said no loan sales in 1Q raises questions given SoFi designates its sales as held for sale. With SoFi not selling any personal loans nor student loans in 1Q, which by the way is going to change. They're going to get about $80 million a quarter because student loans are coming back as of next month, if what I'm hearing is correct. And this what I'm hearing is from Biden's education secretary. It enabled the company to lean on internal modeling assumptions to arrive at its fair value marks rather than using the marked dividend derived marks from actual loan sales. It's like if you market to market. This follows only $60 million of profit losses in sales and SL loan sales in 4Q, resulting in a very limited loan sales occurring despite $6.3 billion of PL and SL originations in the same 6-month period. We fear that if SoFi were to sell loans, it may not achieve the same level of gain on sale margins that were generated in 3Q and 4Q of 104 cents on the dollar. You know what I'm going to do? I'm going to send this to Chris, and we're going to get Chris's thoughts on this. Most of the SoFi community is saying it's not the biggest deal. So Chris says, this is the other Chris. Yes, is this a SoFi risk? Yes, absolutely. But to downgrade the company because of one concern when the company's been firing on all cylinders is odd to me. Take a step back and look at the bigger picture. And see, a lot of Wall Street has not been looking at the bigger picture in the context of how this is a digital bank. There's member growth, there's cross-selling, there's Galileo, there's this integrated financial community. A lot of people are not looking towards that, especially a lot of Wall Street people. But it is something to think about. It is something to think about. And I think Chris has said something similar on the past couple of podcasts about SoFi. But to downgrade it from 5 to 250, I mean, that's a little aggressive to go down. I mean, the company had 433,000 members like yesterday. I mean, that's hard to imagine that. But let me see the actual stock. Let's go into that because I didn't see how the stock's doing today. The Wedbush analyst has a terrible rating. Yes. So that Wedbush dude, let me pull him up. He's not one would argue not the best to take advice from. Let's just say that as well. Yeah, so this is the guy, David Chiafari. This is the dude. Palantir is also down today. David, he has 0.5 out of 5 stars. He has a 39% success rate, average return 6%. So he loses $6 for every 100 he invests in the stock market. Okay, so I mean, take that with what you will. He could be right on this. We have no idea. It's just that's his past. Now, people that are saying Palantir is down, look, I hate to be the guy that said Palantir was going to come back, but it's going to come back. Wow, 470. Goodness gracious. Yeah, SoFi got hit. Palantir's at 925. I said this publicly on Twitter. If we can remain above 9 for the next couple months, I will be so happy when it comes to Palantir. Because I know how hard this channel that we're locked in is. Like, it's not an easy channel to get out of. It's just not. And so if we can even get out of here or just stay here, that I would be happy versus reverting back to 7 and 8s. Do I think we have a chance to revert back to 7 and 8s? Yes, absolutely. 100%. Now, if that does happen, I think given management's increased ability to generate demand for their products, which is what Karp was saying, and there was a great thread by Matt Money on Twitter. You guys have to check him out as well. I think that it is going to be more likely than not that the 18% revenue growth year over year is sandbagging, which means buying at 7 or 8 to me is a no-brainer. The question is, do we get back there? The question is, do we get into a pseudo recession as the market is saying? And the question is, can we get out of this range and continue to hold? That is the question. And if we do, it'll be amazing. If we don't, then, we get to stay above 9. But I do think it can be harder to get there. Buy the dip if it falls to 7 for Palantir. Yeah, and look, I was buying all of 2022 and 2023, especially when it got to 7 and 8. So I'm happy to buy it there again, especially with management saying that AIP's demand is like really big. But again, quarter-over-quarter growth for Q2 is going to suck, right? I mean, unless they beat us again, they beat by 19 million this time. They're trying to increase by 4 million next quarter. It's going to be like 0% growth, right? And so that's okay, right? That's all right. It's just Q3, Q4. They have to kill it, mainly Q4. And I believe they will, which is why 7 or 8, I would like to buy it again. Smoke Tuna, good morning. Thank you for being here. Palantir can go down to 7 only on economic factors. Otherwise, it'll be range bound between 8, 5, and 9. Yeah, I mean, look, the other thing is institutions actually came in. Some institutions with these increased price targets, and maybe, I don't know if retail ran it up 30%. I think it's a lot more institutions. But that doesn't mean they're going to stay. Just finished last night's pod. Subscribe to the new channel. Oh, yes, ladies and gentlemen, we've got a new channel. If you want to subscribe to Finance Junkies and our new channel, we are officially going to do the podcast on that channel one day. Not today, and probably not in the next couple months, but we got to build up this new channel. So if you can, I'm just going to put in the description. And we have 171 subs, which is awesome. So thank you so much for everyone who has subbed. This is the new channel. There's just going to be clips from the show. So if you don't catch the podcast, you can just catch the clips, and that's it. Amit, what's your cash percentage? I am 0% in cash. Everything I have is in this market. And I've consolidated my portfolio to a couple positions, to be honest. So I've literally have 0 in cash. I have to find some money to pay the dentist next week when I have to go to the dentist. So, ladies and gentlemen, it is 9:30 a.m. May 15th, 2023 in the United States of America and all across the world, because the American market runs a lot of the world. The stock market is open. Wake your ass up if your ass is not up. Palantir at 928, not too bad, down 2.26%. Sachin is in the chat. If it goes to 7, I will double my Palantir position. I will use the short-term option account to buy Palantir stock in addition to my buy and hold. This is someone who, if you didn't watch the podcast this week, I highly suggest watching the podcast. Sachin really dominated explaining the bull case for the AI play on Palantir. His U.S. portfolio is 100% inside of Palantir. So his argument is that if it goes to 7, he will double that position. From my knowledge, that means a couple more $1 million into Palantir. So I mean, and I feel the same way. I mean, look, the amount of shares I have, I would absolutely love to double it if it gets to 7, because when management is said about demand, the way AI is growing, it seems like a no-brainer, and the market's just not getting it, and that's fine. The market doesn't need to get it, but I would want to get it at 7. Meta at 237, Amazon at 111, up 1.19%, S&P 412. Again, this so-called recession we're having, we might still have it, but the index is not showing that we're going to have it. I mean, goodness, how many days have we been above 400, which has been a real psychological kind of barrier to cross in regards to just like the market in general. The S&P has been fine. And it's not collapsed, as people have been saying, to 3,200 or 3,100. Pac West Regional Bank down 0.66% at 4.5. AMD 94. Disney 91. I researched a lot about Disney over the weekend. Disney's got some issues. And you know how I've been saying they need more general content? Guess what they're doing? They're combining the Hulu app into the Disney Plus app because they need some more general content on Disney Plus, and they think it'll consolidate the subscriber growth, which I think is a good idea. But nonetheless, like I've been saying that for a while. I do think that needs to happen. If Disney doesn't start creating their own original content like Netflix for like rated R audiences, I think it's going to be hard for them to compete. Robinhood at 862 lost all of its earnings, prompt down 1.43%. Western Alliance, another regional, up 27.79. Truist Financial, 27.31, up 0.03%, relatively flat this morning. SMCI 137, JP Morgan 134. Nvidia 284. Stanley Druckenmiller bought 500,000 shares of this company in Q4 2022. He's long Microsoft and Nvidia as his 2 largest positions and short the US dollar. We're going to talk about that later tonight, but it's an interesting kind of spread that he's doing. Basically, he thinks the economy is going to get shit on, which is why he's expecting a massive recession. It's kind of like a Jeremy Grantham type of prediction, because he's very like, he just thinks it's going to, I mean, like, this is one of those things where he's been calling on a collapse for a while. Tesla 167, Google 117, Square 55, Apple. The reason Apple's not moving up or down is because no one wants to buy the stock, but people definitely don't want to sell the stock. So it's kind of just flat at 173. It needs to get to 179 to reach a $3 trillion market cap. Look, their mixed reality headset stupid devices coming out June. I have no respect for it because I have no respect for the VR space, to be frank. I think there's applications of it, but the bull case of it being replacing the iPhone, I just don't see happening. I like Meta because of the ads business, not because of the metaverse stuff. So I would not be a net buyer of Apple right now. Uber 38.26. We've got Cloudflare 49. What else do we have? Opendoor. Let's see where Opendoor is. Opendoor is 190. Opendoor has been up about 100% since it reached its lows back in February. But Opendoor doing all right. Wow, SoFi 4.6. Goodness gracious. You know what we need Daddy Noto to do? He's got to come out and throw a couple dollars. He's got to throw a couple dollars at this. Did you see the hit piece by Wedbush against SoFi? I did. Yeah, Chris, can we get your thoughts on it? What do you? I literally said on the chat in the morning we were going to send it to you and get your thoughts. What are your thoughts? Apparently, you think it's a hit piece, so that's the first thing. I think it was a hit piece as well, because I mean the thing is they ignore everything and they say, and they do some stupid accounting argument about tangible book value and how it needs to be down in a different way because the government's going to force them to count. It's like, that does not take into account not even 2% of the overarching business. So yeah, I think it is a hit piece, but I mean, there is some truth to it from the loan origination perspective, but it's not enough to warrant a 50% downgrade. Okay. Chris wants to be on. Perfect. So let me send it to you and see what you have to say. Chris, I'm going to send you the invite in 5 minutes and then we're going to start. Actually, let me send it now and then I'll get you on. Can you look at ASRT and SPPI merger? I'm going to take a picture of this and I will, we'll look at it tonight on the Finance Junkies podcast. So we'll look at it tonight. All right. By the way, ladies and gentlemen, before we continue, I just want to give a shout out to, at 14 minutes and 19 seconds, we hit 300 on the live stream, I think for like the 4th day in a row. So thank you, ladies and gentlemen, to getting us 300. 300 is absolutely a hard thing to do. So I appreciate everyone helping us get there to 300 on the live stream. And we're at 300. Awesome. What else we got? Chris, I just sent it. What else we got? It will be the first person trying VR naughty. That's funny. I want to go to CNBC real quick. And there was one thing I did want to show. Now, again, the really unique thing about what's going on is everyone expects the Fed to pause interest rates next month and in July. And if that's the case, if that is the case, then that may be seeing that we're pivoting closer to a rate cut. Now, others don't think that's the case. For example, the Atlanta Fed president came out and said, we're not going to get rate cuts until 2024. I think a lot of people, and the Fed didn't say till 2025, but the one unique thing that's important to understand is that the CPI at 4.9 is officially underneath the Fed funds rate. And so if the CPI is underneath the Fed funds rate, at some level, no, there's not going to be a cut, but there's definitely going to be a pause. And if there's a pause, and if CPI gets to 4.7, 4.6, you can't have the Fed funds rate at 6% when the CPI is lower than that, right? The whole goal of the Fed funds rate is to help decrease the CPI or inflation. And so I wouldn't be surprised if we get a cut by the end of the year, at least one cut. And even a pause is going to be bullish, but a cut is also going to be really, really exciting for people to see. SoFi, how bad is it still getting hit? Is it still getting kicked? Wow, 4.57, down almost 10%. Wow. SoFi is absolutely getting hit. Now, let me take a look at this. This is also really important because we've got debt ceiling talks, and the reason why the debt is important, this is basically how much the United States is allowed to spend, and this has major implications for the economy. So let's take a look at this, and then Chris will be on, and then we'll talk.
Meetings expected to continue this week in Washington. Kayla Tausche joins us with more at this point. Kayla, what are you hearing?
Well, Becky, President Biden is expected to bring top congressional leaders back to the White House on Tuesday to discuss the last week of negotiations among staff, which worked through the weekend on key issues to try to bridge the gaps between the two sides. The president asked over the weekend in Delaware if there was a deal. He said he was optimistic.
I remain optimistic because I'm a congenital optimist. But I really think there's a desire on their part as well as ours to reach agreement. I think we'll be able to do it.
Now, the two sides have been discussing 4 policy areas put forth by Republicans, but they're still far apart on several of them. For instance, Republicans want a 10-year cap on government spending. Democrats want 2, according to sources. And as for work requirements for those receiving government aid, well, Biden said he was still waiting to see the Republicans' proposal.
Okay, here's the main difference between the Democrats and the Republicans. The Republicans want to cut spending. The Democrats don't want to cut spending. Like, that's all you need to understand summed up. So in order to raise the debt ceiling, we have to incur more debt. And in order to incur more debt, the question is, what type of debt do we incur? The Republicans want one type of debt. The Democrats want a different type of debt. The Democrats are in the White House, right? Ultimately, Biden has to sign this. So that is where the negotiations start from. But the Republicans are trying to cut as much spending as possible because we're just incurring on trillions of dollars of debt every year, like it's nothing. And the problem is we can't keep doing that. And you need to have a fiscally, conscious administration understand that. But at the same time, there is some spending that needs to get done. So this is a very complicated issue, but they're always going to reach a solution, right? It's not like they never not reach a solution. The problem is it actually going to happen? Chicken Genius sold out of his Palantir. My quick thoughts on this is that it's not a big deal. Look, he made $100,000. I mean, $100,000 is in a day of Palantir, or a couple days, couple weeks of him having the position. I think is not the worst thing in the world. The thing is, Palantir, again, like, I can't blame him, because if Palantir, if it was starting to just continue to rise a steady trend, yeah, I'd be like, this is dumb. But we've seen what happens with Palantir. It just falls back to normal. I hope it doesn't fall back to normal this time. But if it does, then he can get in at a lower price. Like, it kind of makes sense to me. So, in terms of that, I don't think that's the worst thing in the world. SoFi at 460. Let's go to Palantir. Are we below 9? Wow, no, we're holding up 943. Amazing. And again, if we just stay at this level, I would be so happy for the next couple of months. Just so we can normalize 940, because then we can move on to get to 11 and 12 as we get to better earnings growth, versus being stuck, at 7 to 8. So Palantir doing phenomenally well on a tough day. SoFi 457. Noto's going to come out. He's going to make a statement. He's going to say something. All of the gains that SoFi got, this is why these analyst price targets are insane. All of the gains that SoFi got from earnings, and it dropped to 470 on earnings, but it came back to like 550. All of that has been wiped out, and it's now lower than it was after a triple beat on earnings, which does not make any sense. And the reason is because of this analysts' rating. Wedbush is a pretty highly respected firm, but it's phenomenal. I mean, like, you can imagine some of this. I mean, I don't know if this guy's a short on the stock or whatever, but like if it's that influential when he makes a pick and SoFi collapses, or the SoFi retail base is just that paper-handed, right? That they sell when they see something like this. Because I don't know, or maybe it's institutions doing this. I don't know, because that's a lot. SoFi now 3 cents away from being in the 440s. We didn't see these prices since till December, and in December I think the lowest was 480. So it is. I mean, it is coming down to some pretty low levels. TTCF is now below $1. Okay, yeah. So Jeremy sold out of TTCF. It crashed after hours, which just lets you know how much influence he has on the stock. Look at that. It's down 30%, bro. I mean, I saw his video. He took it like a man. He said, look, I made a mistake and I'm done. And he took $1 million loss, which this sucks, bro. No one wants to lose $1 million, bro. Like $1 million. No one wants to lose that. That's a lot of money. Like, there's a lot. But it's done. The TTCF saga is done. His main argument was the vegan revolution is not like going to be a thing. And this is one of the things about making a thesis on a stock. It's like, if AI is not going to be a thing, Palantir is not going to be valuable. And this is what my problem was with crypto in 2021. I saw all these companies like praising Web3 and like decentralization. I'm like, I don't think any of this is going to, same thing with VR and the metaverse. I'm like, I don't think any of this is going to matter. No matter how much we want to theorize about this. AI is one of those things where you're like, oh shit, no, this is going to matter. Because if you use ChatGPT in your own life, you realize how much it matters, right? There's a positive correlation with what we're doing. So from that perspective, yeah, there's definitely a way to measure the bull case. But if your thesis dies for a company because the macro doesn't support the thesis, then yeah, it's hard for it to survive. Under 5 means it's a penny stock. SoFi is officially a penny stock. SoFi is officially a penny stock. Wow. If it went to 15 tomorrow, would you sell? 100%. If Palantir went to 15 tomorrow, I would sell. That's basically a 85% increase from earnings within a week. That's just not sustainable. There's no catalyst for it to get there. That's like it going to 38 or whatever, 45 in 2021. Also, the market cap, I think, would be a little bit too high to justify their current earnings. I think 15 by the end of the year would be awesome, but we've got to put up some numbers and we got to beat this 18% revenue growth thing. Any thoughts for PayPal? So on Finance Junkies last night, we spent a good 15 minutes on PayPal. Look, to me, yeah, let's look at the charts. Okay, it is at its 52-week lows, which is exciting, but the problem is the company's not exciting. The valuation is exciting, and Carlos made a good point. He's like, if you're not excited about the company, even if the valuation is at a nice level, do you really want to follow it, own it, etc.? Vitalik was buying PayPal at a lot higher of a price in 2021 because he thought there was a moat on fintech. And he made a good point last night. He's like, there's no moat on fintech. Now, again, on SoFi, I think Galileo is a moat. I think their digital banking services is a moat. They're not just a money processor. They're an investment firm with a bank and all this stuff. Like, so I do think they have a moat. But in general, yeah, he's right. Fintech doesn't have a moat. I mean, PayPal has a moat, which is a network, which is that everyone uses PayPal. So there's a network effect. But is there really a resounding, core product differentiation from Cash App? Not really. In fact, Cash App's probably better. So to me, like, yes, maybe this is a company that's just being thrown out like Meta was at $88 in October. I personally don't want to allocate any cash or any part of the portfolio to PayPal to build out a substantial position because it's just not an exciting enough company to me. And it may come back. Is it going to double as quickly as some of the others? I don't know. I mean, Wall Street does not respect the growth story, even if the valuation has become stupid. I mean, if it's on a downtrend for 3 years, like, there's obviously a lot of disrespect. I mean, Meta was on a downtrend for a year, and then it just reversed course. Was it even a year? It wasn't even a year. Yeah, it wasn't even a year. Meta fell in February 2022 from 300 to 240, got to 88 by October, and now it's back to 240. So within less than a year, it came right back to its not to 300, but to a pretty decent valuation. And I don't know if PayPal is going to be at the same level. PayPal should buy SoFi. Ooh, that's an interesting one. PayPal should buy SoFi. They do have the cash. The question is, are they willing to put up the premium that shareholders would want? I think Noto would want a minimum of 25. Maybe he settles on 15, but he would want a minimum of 25, in my opinion. Now, granted, he might make more off a sale of SoFi at 15 than his options he would get at 26, which he has to maintain for like 60 days by 2026, at least in the next 3 years. The other interesting thing about SoFi and PayPal, or about SoFi, is if they sell for 15, that would be below the IPO SPAC price of 21, correct? The SPAC was 21, if I'm not wrong, with Chamath Palihapitiya. Ray, good morning. Thank you for being here. So I don't know if he would want to do that. PayPal is a financial services that ban people for their political views. I can't understand how it even exists. This was also controversy. They were like monitoring the stuff you paid for or something, and they were like saying you get. So this is also some stuff that went on with PayPal, and I don't know if that declines in the stock, but that's also a reason people are not the fans of it. Yeah, this is hilarious. Sasky Rose says normal people when thinking about to say Amit, ba. I do that. I stutter a lot on like the first word of the beginning word of the sentence. Yeah, you guys did notice that. You guys did not. Palantir's down a bit this morning. Time for Kathy to sell out. No, let's get Kathy to buy back in. My average is 15, Blake. Let's get Kathy to buy some more. I think that's why she didn't buy on Friday. Because remember, when she buys in droves. So I think maybe she sees that it's going to come back down to 8 or low 9s, and then she's going to buy even more. 424 was the lowest for SoFi, I think July 2022. Okay. Understand. I don't understand how you say VR is not going to happen. It's inevitable. I'm not saying it's not going to happen. It is inevitable. I just do not think it is the every single day people step into a VR headset. Like, I just do not think that happens. I think it will work in healthcare. It'll work in military. It'll absolutely work in gaming. I do not think it will be the next generation of computing that sustains all of our. Remember, the only reason YouTube and Facebook and Instagram and all these apps have any like mobility to them is because of the phone. The phone is the central operating system, the connector of billions of people. You can't have this massive industry for the metaverse unless billions of people daily are using the device that connects you to the software that enables the infrastructure for this massive opportunity. And I personally do not believe, and let me know in the chat if out of the 345 people here, you think you're going to spend how many hours I must spend with this iPhone? At least 10, 15 hours a day. It's with me constantly, which is maybe not the healthiest thing, but nonetheless, it's with me constantly. I don't think I'm even going to spend 20 minutes on a VR headset a day. I don't think it's going to happen. And I think for a lot of people, it's not going to happen. It'll have to happen with glasses. Yeah, I don't think the VR glasses thing. Google tried that with Google Glass. It's not that easy. It's going to take a while. And so I don't see that happening anytime soon. SoFi is down 10%, ladies and gentlemen. $4.51. Wow. I'm surprised they didn't take the rest of. Well, yeah, I mean, the rest of banks are probably not necessarily going to be affected in the same way. But yeah, the rest of the regionals are actually doing okay. Yeah, man, it's down. It is down. Okay, let's see some other. I think Noda's gonna come out with a statement, and he'll come out with a statement soon. Look, selling some cash secured puts on SoFi is not horrible. Let me actually. What are the premiums on SoFi's cash secured puts? So let's look at it. When days are red, that's when you want to look at selling cash secured puts. What are the premiums? Let's do June 9th. Sell put. The premiums are shit. Yeah, the premiums are not exciting. They're like less than 1%. Yeah, I wouldn't. I mean, okay, January 19th, 2024 is nice. It's a 20% premium. If you want to get, you get $90 up front, and the strike price is at $4.05 by January 19th, 2024, which is not a horrible strike, but it is a bit far away to lock up capital. But $90 off 450 is not bad. That's actually not horrible. That's a 20% get. That's not horrible. That's a 20% premium. You just have to lock up your capital for 6 months. You got to lock up the capital for 6 months. Robinhood is introducing 24-hour trading. That's going to be very interesting. We were talking about it in SoFi Weekly. I was like, how is this possible? How can you, like, if the market, for last time I checked, okay, and I'm not the smartest guy in the world, but the market opens at 9:30, it closes at 4. That's the way it's been. Now Robinhood's like, nope, you can just trade whenever. And I'm like, you can just do that? Like, you don't got the SEC like gonna say something? Like, you can just do it. And apparently, yeah, it's their brokerage. They can do whatever they want. And so I guess Well, that's very interesting. That's very interesting. Okay, let's take someone who's a little bit more bearish on what's going on with the markets and see why he's cautious for the markets.
About the markets and bring in Jason Trennert, Chairman and CEO of Strategas Research Partners. That's a Baird company. I don't know whether you're feeling any more optimistic or any more bullish. We had a Piper Sandler technician on who said 4,600 on the S&P. We'll get through 4,200, and this is more than just a bear market rally only to retest the lows.
Yeah, I think, technically, certainly anything can happen. That could happen. I think from a fundamental perspective, to get really bullish from here, you have to essentially be betting on things that have never happened before. So you'd have to be betting on the Fed tightening by at least 500 basis points and you're not having a recession. You'd have to bet on some sort of fiscal austerity, not.
Okay, so basically the guy says you have to have a 5% rate increase in order for us to avoid a recession. I don't know if we need to have a Fed's fund rate at 10%. Like that doesn't necessarily make sense.
Impact in the overall economy because the bill has come due for all the fiscal profligacy that we've had. And so from my perspective, I'm still quite cautious on the economy and the markets. And a lot of it comes down to the fact that, as I said before, the bills come due in terms of QE. The Fed, it may have stopped tightening. I would say that's very likely. But the idea that the Fed's going to start easing anytime soon, I think, is very, very unlikely. And as Mike said, you have a window here between the last tightening and the first easing. The irony, though, is that after the first easing, if you get a recession, the market tends to get tagged pretty good because of the lags involved in monetary policy. By the time the Fed starts easing, you realize that you're actually in a recession. So I'm still cautious that we're defensively positioned in the portfolios that we over.
Now, that thing kind of also could happen, right? Like this idea that the Fed decides to pivot and then quantitative easing starts and then things are starting to look okay, but then a recession happens, which is exactly what happened with inflation. Like we thought inflation was gone, and then by slowly, it's creeping up. And before you know it, the Fed has to immediately start making a definitive pronouncement to get rid of inflation because it's here after just a couple months of them saying inflation was transitory. So that's interesting. Also, yeah, so I misinterpreted what he said. He's saying that you'd have to expect that we raise by 5 and not have a recession, which has never happened. Yeah, that's true. I mean, look, there's a point there because the Fed has raised rates 500 basis points, right? We're up at 5% Fed fund or a little bit above that. And we have not had a recession. This recession hasn't happened. Now, again, individual companies have had their equities destroyed, right? Meta at 88, Google at 80, Amazon in the 80s, obviously Palantir in the 5s, right? So individual companies have had equities destroyed, but an overarching recession, we touched 3,400 on the S&P, which is like a 20% decline from all-time highs for like a couple days. And then we rallied right back up because earnings were really well. And so because earnings were well, part of me is just like, maybe if we had a shitty earnings and we just had a decline and then we could weather through the storm and move on, we wouldn't have this talk of a theorization about a recession. But now it's like, maybe we have to theorize about it because earnings were good and we're still in a dicey state.
See.
Why is there sort of an old saying that you should buy right at the bottom of a recession? And how long would the recession be? How do you time it? Because a lot of times that's a time when stocks bottom, right?
It's true.
And the recession is obvious to everyone.
Right. Well, and I would say though, Joe, there's no sense that we're in recession right now. There's never been a bear market which bottomed before the recession. And that's likely what people who are bullish right now, they're saying that the market bottomed in October and now people are looking to 2024. I'm saying I don't really see it that way because in every instance, the market bottoms after the recession starts. I don't think we've quite started yet. There are some cracks that are showing. The last man standing in terms of the economy, which is not insignificant, is labor and the employment picture. Claims are starting to move up, but the unemployment rate is 3.4%. There's still a shortage of labor, so it's hard to get a recession when you have the employment at this level. But I think as corporate profits continue to roll over, I think you're going to see higher unemployment.
And we need to go below the October lows, or we could revisit them and that could be the bottom.
I think you could revisit them and that could be the bottom. I think, we're using $200.
That's 340, folks. That's 340. 340 on the S&P. That's what he thinks is going to happen. I don't know, man. I mean, maybe it's like my basic argument against that is the Fed pauses, cuts. Inflation goes down from 4.9 to close to high threes, 3.7, 3.8 by the end of the year. Maybe we have this nice soft landing. What he's saying about employment makes a lot of sense, and how that unemployment rate needs to happen before we have a bottom to around 4.3%. I think we're right now like 3.6%, maybe, even if that. A lot of the layoffs we had were white collar jobs. So like it was tech jobs, which aren't like hurting the economy as hard as we think it is. And still the labor market is really competitive. I mean, like you can still get a job today relatively easily if you try to apply for one. So there is a point for why that may take more time for it to bottom.
For S&P 500 operating earnings this year. If you put a 16, 17 multiple on that, that gets you 3,400. That's around where we were in October. But I just think right now at 4,200, you're betting on something that's never happened before, which is that investors look through a recession. And I get that question all the time. This is the most anticipated recession of all time. Why wouldn't investors look through it? I would say, based on my experience, once the bullets start flying and earnings estimates start to come down, you start to get negative economic news, people are not quite as willing.
Effect.
Yeah, you start to wonder whether things
What
will
if
just
they're
get
in a
worse.
recession?
It's possible, Joe, but I think it's, again, the only time I can think of where we didn't get a recession when the Fed tightened this much was 1994. But I would say this is very different than 1994. That was the kind of the immaculate tightening, if you will, on the part of the Fed. They were able to tighten without causing recession, but they didn't tighten as much as they're tightening now. And I would say inflation is still an issue. Inflation's still 2 to 2.5 times what the Fed wants it to be, even if they say it's okay at 3, which I think they'll do, because I think, frankly, if they actually pushed it to 2, they would cease being an independent entity. They would probably be a committee in Congress or something at that point. But I think that I think they're going to continue to stay tight for a while.
Let's just talk about something else that's never.
He's got a good point. He's got a good point. Like the Fed, his point about them being a Congress committee, if they get down to 2%, that's like more so trying to appeal to this mandate. And that's more political than not, versus at 3, you've got to be happy. You got inflation now from 9%. In a place where Turkey has inflation going up 50%, for us to get down from 9 to 3 within a year and a half is not a bad thing. Inflation's sticky. It's hard to get it down. And we've had to do a lot of things to get it back down. So I'm actually, not upset at the Fed. The question is, are they going to continue to be tight even at 3% and say, no, we're raising rates still? I don't know.
Happened, defaulting on the nation's debt. You think it's fair to look through that to say it may be messy, but they'll resolve it?
I think, Becky, I think that's fair to look through, because we've, I don't know how many, everyone knows this, you probably know the statistics off the top of your head, but we've raised the debt ceiling 120 times or something over the last 100 years. What our view that's a little bit different, though, is that the problems in terms of the liquidity actually coming out of the market happen after the debt ceiling is raised. One of the things that you've seen is the Treasury's general account has been drawn down very dramatically as we hit the debt ceiling. So in many ways, the federal government has been providing liquidity to the market. The irony is almost like the SPR. At a certain point, that Treasury account has to be refilled, and that'll happen after the debt ceiling rises. So that's probably the most non-consensus view that we have, is that the irony is that this is actually an okay time in the second half of the year when the Treasury actually has to refill their savings account. That's when the market and the economy could be more at risk.
Learning more about the markets is so interesting, because this is all just a big game that we're playing with. Look at this. The current U.S. debt ceiling is $31.4 trillion. U.S. borrowing has been rising fast for years. Both Trump and Biden borrowed trillions during the COVID-19 pandemic for relief programs. Total U.S. debt hit $30 trillion for the first time, and the current debt ceiling, which was surpassed in January, is set at $31.4 trillion. Now, the question is, the age-old question, does debt matter? And if the United States is the reserve currency in the world, then other countries don't want to even use their currency because they like using, when I debated in high school, we talked about this all the time, because obviously a lot of political topics came up and we were like, well, what about the U.S. debt? It's like U.S. debt doesn't matter because we're the reserve currency for the world. and other countries will use our currency over their currency. So Zimbabwe would rather use dollars than Zimbabwe currency. The problem is, at what point would we, if we ever say, hey, we're going to default, like, would we ever pay $34 trillion back? That's the question. Is there ever a world in which the United States pays back 30 trillion to all the borrowing we've done? I don't know. The only way you get there is over the next 50 years with massive spending cuts, which is not going to happen. I mean, we could barely afford to pay people's Social Security. And then increase in taxes, but you can't increase taxes to such an extent because you would wreck the free market that we have. So it's kind of like, as long as we're the best country in the world, the most respected democracy in the world, we're kind of allowed to have this unlimited piggy bank. But who knows if one day the piggy bank actually falls apart and it all goes to shit. I don't think it happens in our lifetime per se. I think it happens, or at least over the next 5-10 years, but you never know. Wow, SoFi's below 450. SoFi's below 4. Chris, you were thinking of the stock, man. This might be a chance to now explore the position. SoFi at 450, Palantir at 911. You know, and I want to say buy the dip on SoFi, but I'm also like, well, I don't see the catalyst for it to go back up, because remember, please remember this. It went from 470 to 550 because there was a rumor that the Fed was going to put a moratorium on shorting banks. What is SoFi? A bank, even though it's a lot of other things. So that's why it's just like with all the regionals, it ran up. That rumor is done. The news for that is done, and that news is not coming back anytime soon. So if that's the case, there's no unique reason why it's going to come back up from 450. I mean, what catalyst is in place? I don't know, for it to rally up 10%. So the DCA, I wouldn't be super quick just to immediately DCA on this one. Western Alliance up 5%. Truist up almost 2%. Regionals are starting to follow up as well. SoFi is down. Enphase 167. What else do we have? Palantir again. It's holding 912, but let's see if it can continue to hold. Tesla is down 3%. Even though, look, Twitter's got a new CEO, down 1%. I think that should be great news for Tesla, because even Elon said he can focus more on Tesla. But apparently the market is not giving him that good news yet. Still doing more research. Problem now is regulators. Okay, that is fair. 100 shares of PayPal this morning. Not bad. I get paid today. I might take my weekly chunk and add some SoFi. We will see. Maybe when we go to the digital dollar, the Fed resets everything. That's the solution. That's what we do. Because I hate my cash, I added 25 shares of SoFi and Palantir. Look, long term, I think that's fine. But in the short term, yeah, that cash is not gonna feel too great. It's not all catalysts. There's just market sentiment towards banks. There's the direction the market's going for the day. Then there's individual technicals for the stock. That's just a few factors. Yeah, I agree. And look, the question is, which of those are going to appeal in SoFi's range? Which stocks are you up on right now? Truist, I would say. I have like a couple of shares of Truist, but I'm not up on. I mean, remember, my averages are still not the best. So, all right. That's it for me, everybody. We are at 10:04 a.m. Thank you all for being here. Finance Junkies tonight. We will have a lot to talk about. Obviously, we'll talk about the SoFi stuff. Chris will give us some more in-depth thoughts. We'll talk about what the Fed is doing. We'll talk about inflation, and we will keep moving forward and discuss. There are some earnings today. I don't think the earnings are that substantial, but any like crazy companies, but I'll take a look at those and we will discuss that. 10 p.m. Eastern. We had 300 people join for the past 8 days. So we're going to try to continue to get 9 days in a row. And thank you for the morning stream. I think this is now 5 days in a row, 4 days in a row where we hit 300 every single day. So I will be tracking every morning 300 in a row, and every night on Finance Junkies 300 in a row as well. All right, everyone, have a great day. Enjoy your week. It is the start to the week. Let's kill it this week. We got 2 weeks left of May. Let's do what we got to do before we get into June, which is halfway into the year. And let's keep going. Thank you all for being here. I appreciate it. I will see you guys tonight at 10 p.m. Eastern. Good night, everybody.